I want to bring in Marc Chandler, Chief Market Strategist at Bannockburn Global Forex. Marc, good to have you on the show. Let's begin with big tech, which continues to fuel this market higher.
Yeah, no, you're right. I mean, this has been a strong ride in the stock market. I think it still concerns people, the lack of breadth, but it does seem to be that FOMO. People just have to commit money to the stock market. You know, many of us are contributing our part of our paycheck every week through our 401k into the equity market, and it doesn't seem to be much choice right now.
Yeah. Lack of breath here, I would argue, but no lack of Fed speakers that seem to be kind of fueling the market higher, right? Pushing back on some of those lofty expectations for rate cuts, but I mean, still sort of providing that backdrop.
I think you're right. You know, the Federal Reserve still holds out the Fed dot plot pointing to one cut this year. Many people think it's going to come late this year, but the market still is, the market, I think, often criticizes Chairman Powell for being dovish, and yet the market consistently is more dovish than the Federal Reserve. The market's pricing in about a 75% chance of a second cut this year.
Marc, talk to us about how if you're only focused on the Fed, you kind of lost sight of some of the other policy decisions, right? Bank of Canada, ECB cutting rates, and then who was it you were talking about this morning in your newsletter? RBA, Reserve Bank of Australia, leaving their cash rate at 4.35%, basically where it's been since November last year.
Yeah, next week, excuse me, not next week, Thursday, I got tomorrow off, of course, as we all do, and so I kind of think it's the weekend. But on Thursday, we have three central banks meet, Norway, Bank of England, and the Swiss National Bank. And the Swiss National Bank surprised most people in March with a preemptive cut ahead of the ECB. And most people don't expect the Swiss National Bank to move this week. But I still think that there's a possibility that they cut rates. The Swiss franc has gotten very strong in the aftermath of the political problems that Europe is having, the French election coming up, followed by the UK election in early July. And I think this has really distorted things. Last week we saw, call it an 18 basis point fall in the 2-year, more than a 20 basis point fall in the 10-year U.S. yield, and yet the dollar still rallied. I think this is Europe shooting itself in the foot, and I think that Japan missed an opportunity. The BOJ is buying about 6 trillion yen worth of JGBs, Japanese government bonds, every month. And they could have slowed down their purchases, but they've got about 6 trillion yen of maturing bonds. So once they announce a reduction of their bond purchases, they're really signaling the beginning of QT, quantitative tightening.
Yeah, that would shift the tone a bit, I would imagine, potentially the relationship between the yen, the U.S. dollar. Kind of getting back to Europe here, sort of a light week in terms of data, but you touched on the elections, right? Here in the U.S., we're seeing stocks which have been very strong, yet France, obviously, a different story. The CAC, for example, which has just gotten beat up. But Marc, I haven't heard you talking much about the elections in your newsletter as of yet. You kind of steered clear of that topic for a while, I feel like.
Yeah, I think that the U.S. election, I don't think is really in focus, even though I think it's next week or so that we get, at least before the end of the month, we'll get the first debate between the U.S. candidates. But the real focus is what's going on in Europe. After the European parliamentary election, there's been a big shift to the right. France called a snap election, and the markets blew out. That is to say, the spread between French bonds and German bonds widened sharply. The French stock market, as you mentioned, has underperformed. I think this is one of the factors that have really helped the dollar sort of shrug off the decline in U.S. interest rates. In the fourth quarter of last year, we saw a sharp decline in U.S. rates, and the dollar fell. We saw a sharp rise in U.S. interest rates in Q1. The dollar rallied. And even though we saw that sharp decline in U.S. rates, German rates fell further as sort of safe haven buying. And I think that's one of the factors that have helped the dollar, pushing the euro back down. We were testing 109 before the jobs data, and the euro's fallen through 107, finding some support around 106.80 or so. The low for the year is only 106, so we're very close to the year's low for the euro, despite the slowing of the U.S. economy and the talk of Fed cuts and all that.
Yeah, we're keeping a close eye on those highs in the U.S. dollar from last fall. Ultimately, if this strength continues and we revisit that level, we've been kind of wondering what that would mean for this rally in stocks. Mark, talk to us a little bit about what's playing out in China. We've seen copper come off those peak levels. There was a little bit of enthusiasm tied to some of the measures they were taking to help provide support for the housing market. But then I kind of feel like after the data we've seen recently, some of the numbers ultimately, some of that is kind of been pared back quite a bit.
Yeah, and I think you're right into the general pessimism toward the outlook for China. I think there is a possible pivot point that comes next month. The Chinese government, the Communist Party, has a third plenary session. They'll focus on economic reforms, and I would imagine we're going to see some more stimulus efforts, partly to the housing market, partly to demand in China. It's problematic, I think, for globally, especially through the commodities. The thing that surprised a lot of people last month was that China stopped buying, the central bank stopped buying gold for the first time in 18 months as they pulled back from the market, given gold's rally. I'm not sure they're done buying gold. Many East Asian central banks still buying gold. I think India has now eclipsed China as the biggest gold buyer this year among central banks.
Yeah, not only strength in the U.S. dollar, but also that headline, I feel like, weighed on gold quite a bit here. Mark, talk to us about data coming out here at the bottom of the hour, retail sales. I feel like after the consumer sentiment number, a little bit concerning last week, Friday, this one's getting a little bit more attention than it normally would.
Yeah, so I think that what happened was in April, we saw a series of weak economic data. The data surprise models were all at couple-year lows. And even though I'm in that camp that thinks the U.S. economy is slowing, that we don't get a recession this year, maybe next year, but I think that the April data sort of overstated the weakness of the U.S. economy. So I do think that the consumers haven't stopped. I think we look for a rebound in consumption. We already know that auto sales were stronger. And the same thing's true for industrial production. And there, I point out that manufacturing output, a key to industrial production, fell by 0.3% last month and likely recouped that and maybe a little bit more. So yeah, the U.S. economy is slowing down gradually, and the May data looks so far like it's coming in stronger than the April data sequentially.
Mark, appreciate you joining us here, and I encourage our viewers to check out your post on a daily basis if they have yet to. Mark to Market, Marc Chandler, Chief Market Strategist at Bannockburn Global Forex. Who needs coffee when you have that write-up every single day? Mark, appreciate your thoughts here